Good morning. Welcome to the B.F. Anderson Technical Report of October the 11th. You know, being a contrarian is a very difficult process, understanding contrarian thinking. But once you realize you're dealing with an auction market where you have buyers and sellers, and there's extremes of fear and greed that somewhat determine the direction of the market, at least on a short-term basis. Now, what we're looking at every week here has been the put-call ratio, which is the CBOE options equity put-call ratio. Now, what you have to realize is that these large institutional investors, meaning these mutual funds, hedge funds, pension plans, etc., they're run by human beings just like you and me, and they have emotions just like we do. So, being that these funds generally are so large in size, they don't have the ability to go to cash or to increase investments as quickly as an individual investor. So what they tend to do is they use options as a way to hedge their positions so that they can deal with issues without having to liquidate. Now, we're looking at fear and we're looking at greed. Now, last week when we were talking, I mentioned that we entered extreme greed for probably the first time. Now you can see we've worked our way back to neutral. Basically, I would say that this was a real good time to kind of evaluate your portfolio, determine if you were in things that you were comfortable with. Also, it wasn't a bad time to raise a little cash and have a little bit of dry powder. Now, as a portfolio manager, it's really difficult for me to get into multiple assets, meaning stocks, bonds, gold, real estate, oil and gas, the whole deal. We're focused investors. We tend to stay very focused on growth stocks and cash. Now, what I have here is a graph of the 20-plus year Treasury bond fund. Now, you can see here what's happening here with interest rates going up, which I do think has been a catalyst for the pullback in the market. But the bond market has really taken a hit here and actually is down about 16% from its high that was set last year. So bonds continue to drop in price. So again, back to being a portfolio manager, having a certain percentage of the portfolio in bonds really didn't make a whole lot of sense. I mean, it hasn't worked out at all. Now, gold is interesting right now. Gold has really been dropping. So here would be another asset class that, a portfolio manager can go to, or what we would say is a financial planner, because these financial planners tend to put so much in stocks, bonds, gold, etc., which I'm just not really keen on that idea. But it's done, and a lot of people like that diversity and so forth. Well, that's fine. But you can see here that with the price of gold has really been plummeting, which tells me that there's probably the reason for the rise in interest rates. A lot of people are saying, well, inflation is coming back. I don't see it in the price of gold. The price of gold usually indicates inflation, and the price of gold is dropping. Now, again, here's the latest numbers on the 10-year Treasury note. As you can see here, we broke out over 3%, over 3.1%, and we're making new highs on the yield of the 10-year Treasury. I do think this has a lot to do with why the stock market has been selling off. Now, let's talk about the market, because this has been really, really a difficult period here. This is the S&P 500. You can see here we were in a very, very strong uptrend, started to break down a little bit, and whoop, comes down. The really big drop yesterday, a 3.25% drop. Again, this is a time to be cautious. This is not a time to be a hero and try to get out there and bottom fish and all that. I would basically continue to sit on cash at this time, and I would limit any new buying. Now, the real damage is being done here in a group that was doing extremely well earlier this year, which is the small caps. This is the small cap index, the Russell 2000. You can see it is really broken down. When it broke below these moving averages here, and we talked about this last week, this was the canary in the coal mine. It was telling you that there was the market was not looking healthy and things were starting to look negative. Now, I would also recommend that you keep an eye on stock leadership. You want to look at the big leaders that have been leading this market, and we'd have to say that Apple and Amazon have pretty much been the king daddies. They're the ones that have been kind of leading this market and making new highs on a regular basis. Well, you can see here with Apple, really for the first time this year, we're starting to see a breakdown in the breaking below the base. I would say that a break below 215, say 212 in that area would really be a warning if this leader continues to deteriorate. Now here's Amazon, kind of the same story, but actually breaking a little worse. Now I'm not a big patterns guy, but there are patterns out there that tend to repeat. And so here's one pattern. We have a high, pull back, a second high, so we have what we call a double top, where the second top is lower than the first top, and boom, then you get the breakdown, and then you're breaking down below the prior base. So my attitude on Amazon right now was, a break below 1800, 1850 was not a good sign. We're down to 1755 as of yesterday. I would continue to monitor Amazon and Apple, and if you start to see these stocks firm up and stabilize, it probably means the correction is over. Now, just to make a point on interest rates, the housing industry is really having a tough time here because mortgage rates are going up. This is Toll Brothers, which is a home construction company, and you can see that all this year that stock has really been in a serious downtrend and made it really a new low yesterday. So the home builders are not looking good. This is one of the problems with higher interest rates. It just really shuts down the home building stocks. Now, I'm not going to show the top 5 this week simply because of all the volatility. It really doesn't make a lot of sense to be looking at the growth stocks right now. We'll bring them back when things start to stabilize. But if you have any questions, please give me a call. Thank you very much.